Hey guys, welcome to another episode on the trades we missed last week. So we are going over to last Monday, and on Monday morning we had a bearish trade. So this bearish trade, as you can see right here, on Monday 7th of July we had a bearish trade. There's a fair value gap right here and an order block at this spot. So you can see this as a supply zone. Now price tapping this fair value gap and going downwards, you can also cite another fair value gap being another supply zone. Now this supply area has created an opportunity for a bearish trade. Now coming from a fair value gap, if that fair value gap was a bearish fair value gap, we would have to wait for a bearish fair value gap again and a break of market structure. Now we have a break of structure here as price crossed below this previous low. This low was created prior to tapping into this fair value gap. Now as price closed below this low right here, on our lower time frame, like the 1 minute or 3 minute time frame, anytime price taps a fair value gap and goes down below a previous low, then we have a possible entry after we can cite a fair value gap. Now we have a fair value gap here. You can see this fair value gap and this order block. This signifies a bearish opportunity. Now this is how our short position would be here, where we'd have to enter, and after price enters this fair value gap and possibly tapping this order block right here, then we'll put our stop loss right above that previous high, and our take profits would be at any previous low of our choice. Now this one would have been our take profit because this is an immediate low right here, and this is giving us a risk reward of 2.58. The next take profit would be this one below here. If we scroll to the left, we would see a previous low that we use for our take profit. As you can see, when price comes back up and retests that same entry, you can see a risk reward of 7.07. so that was our trade number 1 on Monday. That same Monday we had a bullish trade being our trade number 2. Now price coming from this fair value gap right here. Let me take this fair value gap aside. Now you can see this fair value gap right here on our 3 minute time frame. Price tapping this fair value gap right here and going to the upside, we have a fair value gap and a break of market structure right here. Now after citing this fair value gap right here, we would place our position like so. For a long position, we'll put it here at the start of this fair value gap, and we'll wait for the price to fill up that fair value gap. Our stop loss would be right below this low that created for us that fair value gap and break of market structure. Our take profit can be either this immediate high here, giving us a 1.36 risk to reward ratio, or better still, we can use either of this fair value gap or this previous high right here. As price comes back up, you can see a risk to reward of 3. So we have 3 times what we put in, and that was our trade number 2. And you see how price rallied all the way up to this one right here, to this high, giving us a 5.99 risk reward ratio, which is 6. The next is our trade number 3. After price reaching its maximum TP, it's created a bearish structure. Now in this bearish structure, we can cite a fair value gap here. Price tends to fill this fair value gap and rally to the downside, and prior to giving you a full setup, it created a break of structure right here. You can see how the structure is being broken, price going up. Now a down structure has been opened. Now you can see a break of that structure here and a fair value gap right here. Let me use this fair value gap well. See this whole fair value gap here. This is what we use as our entry because price tends to fill fair value gap. Now this is our bearish trade. A short position here at the start of this fair value gap. We have a short position, and at this top is our stop loss right here. At this high that created that fair value gap is our stop loss. Now the next thing we'll be looking for is where we'll put our TP. Now our TP as usual will be a previous low. Now you can cite a low here. See this low right here. This would be our previous low or our first TP, which is about 3.01 risk to reward ratio. Or you can as well use this previous TP right here. This low right here would be our previous TP. Let me highlight it here. So we have a previous low right here, and this is our maximum TP of 5.01 risk to reward ratio. Now our next trade is our trade number 4, and you can see how price taps from that fair value gap right here. Let me show you guys the fair value gap here. See price coming from this fair value gap right here. This is a supply zone in itself. Price tries to go up to break a previous high and create a fair value gap. It did not break any previous high here. Instead, price drags it down to that same fair value gap and breaks that previous high here, and also created a sweet fair value gap right here. As you can see, this fair value gap here is a good fair value gap to use as your entry. Here is your fair value gap. Now you can use this as your entry, this whole fair value gap as your entry. Fine, that's no problem. But you can also make use of patience. That is, after price taps into this kind of fair value gap, and this is seeming so big, you can just wait for price to create for you another fair value gap and break of market structure. You can see this little high here. Price rallied above this previous high right here and created a vacuum. This is a fair value gap. This is a gap here, you can see. So price will tend to fill up this one, and you can see how price taps multiple times into this fair value gap here. The next thing is your entry. So price tapping into a fair value gap here, then creating for you a good setup right here for a bullish trade. This would have been your bullish position, like so. Here would be your entry, and right below this low that created for you that gap is the stop loss, and your previous high being this high here. This is a 2.96 risk to reward ratio, or you can as well use this fair value gap. So before this fair value gap would be your take profit right here. So this is giving us a risk reward of 5.06. And the next on our list is our trade number 5, and this is a bullish setup. Now we have, as usual, what we cite first is our first fair value gap. This is our fair value gap right here. This one here is our fair value gap, and price coming to tap it would have to wait for a break of market structure that we already have like this. And prior to that break of market structure, we hope we have found a newly formed fair value gap right here. Now you can see a fair value gap here. So this whole area from the start of this fair value gap to the tip of this previous, let me put this one aside, to the tip of this previous low right here is our entry, and this is our risk. So let me put it like this: for a bullish position, we have a long position like this. Our entry will be like so. I'll tap into this fair value gap, and our stop loss will be right below this low that created for us that fair value gap, and our take profit will be right above our previous high. As you can see here, we have a previous high here, giving us a 2.63 risk to reward ratio, like so. You can see how price rallied all the way to this fair value gap here. This also can be your take profit right here, giving us a 4.36 risk to reward ratio. You see how price rallied to the upside, respected this fair value gap right here, and comes back down to our entry. So our trade number 6 is coming from this fair value gap right here. This demand area has shown a fair value gap, a small fair value gap here, and this other block. So as price rallied to the downside and taps this other block, being our supply area, we'd wait for a break of market structure right here. Now we have for us a break of market structure here. This is a previous high that has been broken to the upside, and price has successfully closed above that previous high and created for us a fair value gap right here. This is fair value gap. So we'll be using this fair value gap for our entry. This low could be our risk tolerance. This is our stop loss, or we can as well use this low right here. This one here could be our stop loss and our entry right here. Now we have our trade just like this. Our number 6 trade is a long position and it taps this fair value gap, and our stop loss would be at that previous low or at this previous low for a more carefree trade. Now we have for us a risk to reward of 4.02 using this maximum stop loss, or you can use this stop loss right here for the aggressive traders. And risk, if your risk is not too much, you can actually use this stop loss right here, and giving us a risk to reward of 6.63 risk to reward ratio. That was our trade number 6. And our next trade is right around the corner. We have, as you can see, when you are used to trades, you can also side trades like this. You see this fair value gap, price taps into it, and price broke above this previous high here. The next thing we do is use this fair value gap as our entry to the upside. That is one trade on its own, but that was what I saw trying to look for our trade number 7. And our trade number 7 is right around the corner here. We have a supply area right here, giving us a fair value gap, and price taps in this fair value gap. After price taps this fair value gap, the next thing we would look for is a break of market structure. Now we have a change, we have a break of that structure. You see, as price is going up, now we have a break of that market structure as price crossed below this previous low here. Now prior to breaking that structure, price created for us a newly formed fair value gap that would use for our entry. You know that price has once created for us a fair value gap. Now After price taps that fair value gap, broke structure would have to search for a fair value gap. If that fair value gap is not existing, then there's no trade for our entry. Now we have a trade and we have our entry here. So this is what we will do. We are going to place our short position right here. We put our short position here. We tap this for our entry at the start of that fair value gap, and our stop loss right above this high here, and take profits at this previous low or at this previous low. You can either put it here or here for a 2.92 risk reward ratio, or at this spot for a 3.65 risk reward ratio because of this low or this low. Then for maximum ratio, you can use this. We can use this previous low, and this would be a 6.1 risk to reward ratio. For a carefree trader, you can use this one. You see how this market here, after crossing below this low, the market gives us a 3.02 risk to reward ratio. The next trade is our trade number 8, and market coming from a previous fair value gap. You can cite that after tapping into it, we have a fair value gap and we have a break of structure here and here. So from here, you can use this fair value gap as our entry. This fair value gap right here would be our entry, and you can see how price successfully comes to fill up that fair value gap and rally to the downside, just like so. A short position right here, and stop loss would be above this high that created that fair value gap, and our take profit would be this one right here, this previous low, giving us a risk to reward of 4.26 ratio. The next is trade number 9. Now trade number 9 is coming from a fair value gap here. This is a fair value gap, and you can see a fair value gap right here also. But using this fair value gap, price taps into this fair value gap and created for us a break of market structure right here. So as price taps this fair value gap, created for us a break of market structure here. You can cite another fair value gap that will be used for our entry. Without this fair value gap, we would not be able to enter. So now we have a fair value gap here for our number 9 trade, and we have our entry here. So this would be our entry. So as price comes back to this fair value gap, we would be ready to enter our bearish trade. Now we have stop loss right above this previous high that tapped into that previous fair value gap, and this newly formed fair value gap would be our entry. Take profit can be here, giving you a 1.57 risk reward ratio, or here, giving us a 3.64 risk reward ratio. This is what I'm talking about here. You can either use this or this one here, and you can see a fair value gap here. So you can as well use this one to be on the safer side for a 2.57 risk to reward ratio. So we have a bearish trade for our trade number 9, and the next trade is our trade number 10, and this is a fair value gap coming from our trade number 9. We have a bearish fair value gap here. Price taps this fair value gap, push downwards, and created for us a break of market structure. and also a fair value gap right here. This would be our entry. Now this is a short position right here, and our stop loss right above this high that created for us that fair value gap and break of market structure. Now our take profits would be at any given low. So going back to our left side, there's a low right there that we can use as our TP. So this is the low here, and this is giving us a 4.94 risk to reward ratio. You can see our price almost getting to that low, but rally to the upside again here, and using that same entry to reach our maximum TP. So we have a tap into a fair value gap here on our 4 hour. So we have a tap into a fair value gap here on our 4 hour, indicating that price might do some crazy stuff here and rally to the upside. So prior to that, we might still have a bearish trade on Monday. So I'm highlighting this one right here, this fair value gap right here, as price might actually cross past all this and tap into this fair value gap to go downwards before ultimately pushing to the upside. So that's all for the week. So see you guys on our next episode on the trades we missed last week, and stay tuned, subscribe and click the notification bell below. We'll see you on our next video. Peace.